Highs down to 283 right now. So second gap down in a row. Really nice job starting to short the market on Friday into 286. We did go up a little bit on that kind of parabolic move into the close, but yesterday had the classic gap down. First move was down. We grinded back to 286 and failed. Closed weak, gapping down. I mean, this is a win at this point. As I put in the notes in big picture, there's a decision to be made, and I already made that for myself. I hedged off about 20% of the risk of my options above 283. And now it's pretty much a free trade. If we come off all the way to 280, it becomes a big winner. We go back up, hedged off the risk with a little spies, and that's that. So we're still in a bull market. We just so happened to get a little bit extended. That trend just got really steep. That's the only reason we were looking to get short. Here's the steepness of the trend. We're kind of moving, grinding higher, accelerating, and then just explosion. It'll be interesting to see if this ends up leading to a bigger pullback over the next couple of weeks into the 270s. But right now, we basically have a 1% pullback, which in this market isn't bad. I think, if you bought puts and shorted, took this market trade with me, I think on a flush down to 282.60 to 282.40, I'd be looking to buy. That's a spot. You can kind of see we put in the all-time high here, 284.5. And then the next couple of days in this area here, about 282.5, $2 lower. That acted as a kind of as a bounce spot. In fact, we closed here, and then I guess on Friday morning we gapped up above 284, and that was that. If we bounce here intraday, and you're looking for a spot where you'd like to see the market fail, I think 284 is the first spot. Then above that, it's 284.5. Would be the first time, actually, if that does happen, that we've had like kind of three things happen to confirm a market pullback. Meaning, we had the gap down on day one, down move to lower high, gap down on day two, and then a failure here. I guess that would set us up for a move to this. And then that would be, what would that be? That would be $5 off the after hours high on Friday. I mean, generally, the rule of thumb I use, at least I was using last year, was when the SPYs get a little bit extended and start to pull back, $4 to $6 pullbacks in the SPYs. And that would be just a very, very normal pullback, as opposed to a little bit of a bigger picture market pullback of 3 to 5%, which we haven't seen in, a year or two. All right, so earnings season heating up. We got a very busy day tomorrow and Thursday. Today we got a few things going on because of some earnings, but then also the Amazon, Berkshire, JP Morgan release on the healthcare news. So let's start with HOG. HOG's on the conference call right now. It's down a few dollars. The shipment guidance was poor. So the shipments peaked in 2016 and they were down last year, and they're guiding them down again for this year. And so when that happens, we want to see how much has it come off. So if we look at it when it peaked out in 2014 at 70 plus, it had pulled all the way back to here. If we went through that, $40. And then it rallied back. Most of this down move got erased. Just eyeballing the percentages, looks like about 3/4 of the down move got erased into this up move. So there's no clear, if it was trading down here in this guidance, shipments was down, I would think, oh, maybe it's already priced in. But it's kind of, if you look at from 2016 to now, you say 40 to 63 is the range. It's a little bit, it's in the top half of the range. Well, I guess it's actually gapping down right to here. I could see it coming into the bottom half of the range now with this guidance. So let's zoom in. All right, so we actually get a pretty good picture of the last couple months. So it got up to this 52 and failed here, failed here, failed here. Looks like it failed about seven times in December. And then it held here. It's pretty clean, actually, if you're watching the stock as a breakout trade. It held above 52 and went up to 55, came back, did a retest on 3 days in a row, and then made a higher high. So 52 is the inflection. I don't think I put that on the sheet, but I guess I put support 51.80 to 52. I would actually rather use that as inflection. If it's holding below 52, look for a trade down into here. It was a little bit generous on the support set here, but this is it. And if it pops, it must have been up here earlier when I was looking at it, but this is 280. And I had as the first real resistance kind of 54 from a few days ago where it went vertical. So these are the prices I'm looking at with this as my inflection here. For those of you who are newer, inflections basically means holding below the level, look to get short, down to here, holding above the level, look to get long. And it would be to here, and then see what happens here. It started to get a little bit for this range here. It's only done 100,000 shares in the pre-market, which is not a lot of volume. It's less than 5%. So we can't really get that much information on price levels there. Teva, 5 billion shelf offering. I forgot that it had gotten all the way down to $12 before the bounce back into the 20s. So it bottomed here, I guess, with the sector, the specialty pharma sector. There was some good news here. Remember we shorted it on this day here at 22, I think. Or we talked about it probably failing at 22. It got up to 22 and a half and then back below. The next morning it failed at 22, came into 20. I may have got long here into $20. I think I actually did. And it held here for a few days. So it's gapping down. Where is it? 2050 offer right now. Let's see. So the question is, we don't know what type of, is it going to just be debt or preferred shares, or what type of, it says mixed shelf. Depending on what that actually turns out being, there could be more downward pressure on the stock. But for today, again, it's already open in Israel, right? So the price probably in the pre-market is determined by where it's trading in the Israeli market. So yeah, it came down hard down to this $20 and bounced $1 from there. I think that was the trade that I made. Yeah, you got to continue to use this 20. Maybe even if it gets a flush on the open below there and gets back above, you got to play it for a 50-cent up move. It could actually bounce all the way back up. Meaning, if the market says, okay, they're going to be able to raise the money comfortably that they thought they would. The problem is, with the announcement now, it probably takes a few days to go out to the market and see what the demand is for the debt and whatever securities they're issuing. Anyway, we'll see how it plays out. But 20 is the level to watch initially on the open. And then I put 1880 on there. If it ever starts to hold below 20, gets below 1980, you can look for it to trend lower. All right, now we're getting to the part of the program where we talk about the stocks impacted by the Amazon, Berkshire, JP Morgan announcement, which is their consortium, or I don't know if it's a consortium. They're forming a separate company, nonprofit. I guess it's the same as Blue Cross Blue Shield. And they're just going to look for ways to make healthcare more efficient for their, I don't know, 1 million plus employees or something, which is always viewed as a competitive threat to these in the sector. Remember when ESRX and CVS and those guys got hit, and people thought Amazon was going to start doing mail order prescriptions? I'll show you that when we get to the CVS chart. But in the meantime, this thing was coming off. It broke the downtrend, was back above $80, and here we are back below this. And I guess coming into this. You can obviously, this is an area right here.
Not that again,
all right, so it's already touched 75 here. So you can kind of see it's been a week. It got up to 75.60, and then it was accumulated for about a week or so between 75 and 75 and a half. So that is the natural place where people would be looking to buy it. I don't know if it's going to bounce all the way back up to 80, but maybe 77, 78. I think it's definitely worth looking at here. I'd be more focused on looking for the bounce first. Even if it flushes through 75, you then have an area here where it consolidated between 74 and 74.5 for a week after the breakout from 68. So that would be my first thing. And then after it had some sort of morning bounce, then I would look to see if it drifted lower again. It normally trades 3.5 million shares. It's going to be a little bit risky for less experienced traders, but I think you could easily trade 5 to 10 million shares today. Then the other one for the same news is CVS. So the funny one about this is if we go back to, I think it was November, when Amazon first announced they were going to get involved in the, or they didn't announce. People thought they were going to get involved in prescription drugs, and it had come up from $80 down to 74, and it started to bounce back. And then Amazon news came out, and it dropped from 76 to 68 basically in 2 days, and then made a lower low before it got back above this low, and then had the bounce. So the interesting thing to me about it is it's now getting hit again on the Amazon, on some type of Amazon news. Amazon news. Completely different. But notice it shook off the news last time. It got all the way back up to this pivot high. And so now it's starting from higher levels on news. And so it's coming into this here. And where are we now? 78 offer. So let's zoom in. So if we're looking for a bounce on this one, realistically, I mean, this is the spot right here. 77 to 77.5. Did I put that on the sheet? Yes, I put 77.5 on the sheet. And these are actually all the levels I put on the sheet. So this and this.
This is actually like the opposite. Apple, like a few days, and I expect this to run a little bit.
So, I mean, clearly I'm not the only person. Institutional traders are looking at the 77.5 level. Could bounce $2 from there. We'll see what happens when the market opens up, if it can still hold there. But even if it flushes through here, it'll be important if it gets back above and starts holding above 77.5 to look for a move to 79.5, 80. And that's my thought process there. For initial moves, we'll see after 10 o'clock how things kind of shake out, settle down before looking for longer trends. Remember, first 15 to 20 minutes is no trends, just price discovery. The next one is PE. PE, they gave an updated guidance on their production levels. So they basically erased this entire move. It started at 26, it got up to 27, and then just exploded to 31. We're right back down there. So this seems like a spot where people would be looking to buy it. I don't know if I put on the sheet, but this area here in the low 25s seems like the spot to definitely fade it and see what would happen if it bounces back to 26. This might end up being a longer term play if it actually bounces from here and you sell half into 26 and kind of see if it can work its way back up over the next few days. Second day technicals, win. I bought a few shares right at the end of the day. I thought a flush before the rush today, meaning we had these, it was a few weeks ago, I think. Maybe it was a month ago, where like right on the open, we had gapped down and bought a few momentum names like Facebook, Netflix, and then they flushed and then they they bounce. So I call it the flush before the rush. And we're gapping down this morning. So anyway, maybe right on the open you put in the low, and then you see like just one of these quick moves back up, something like that. I think people are nervous about what could happen in Macau. But again, 200, it is not quite a 20% down move, but it's getting real close. Oh, yeah, actually, it is a 20% down move. So it's at down 20% right now in 2 days or 2.5 days. So yeah, any flush below 160, 157, 58, and then what you want to see is it holding above 160 and holding above 162, and play a move and kind of take yesterday's resistance areas 165, 166, like right around here. STX, this trade mainly worked for me because I shorted it in the area where I discussed with you in the pre-market as it was happening during the morning meeting. And so I was short from 57, and it kind of went down to the 54 area. I've been targeting for initial down move. It held. You can see the prior day's support. It held, came back down. They supported it here again. And then it had a big bounce. So I don't know how real these prints are right now. Yeah, it is actually being offered. Is it downgraded or something? Price target raised to 53. Oh, I guess somebody raised the price target just to kind of below where it's trading. But they were obviously wrong before because they had a $40 target. But in this situation, when it has a bounce like this, I just look to see, does it fail a little bit lower? Yeah, if it wasn't gapping down right now, I would say 55.5, 56 doesn't make a lower high than yesterday's pre-market, and still look for it to come in and test this area again. And then eventually I talked about it getting to 52. I still think that's definitely a possibility. Just needs to hold below 54 for a bit and then break to the downside. And then Aaron's asking me about this IMMR, which gapped up yesterday on the settlement with Apple. I didn't even check in with it yesterday to see what it was doing. I thought not sharing the settlement news. It's great, actually, if you shorted it against the pre-market high. It did fail there and came off, so maybe you did that, Aaron. Good for you if you did. Came off $2.50 or $1.50. Looking at it today, I don't know if somebody did give it a $15 price target. And this one is, so my general feeling is on glaucoma drugs is I like trading those because it impacts such a huge percentage of the population and people understand glaucoma. And so I favor trading things, small biotechs that have news on glaucoma for that reason. So it's beaten down. It was an $8 stock for a while. Last year it came into 3.5, got beaten down to 2. It bounced back up to about 4, where I'm sure people were shorting it. And then it came back down and made new lows. So it's pretty broken stock. I don't really have time to see exactly if the news is for real, but it's gapping to 250. So I suppose if it's you're going to use 250 as an inflection, and then what happens if it comes to 2 and gets support, and then above 250, would it fail at $3? Those would be the first things you would look at. As always, be patient and good luck.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.